Good morning, and thanks for tuning in to today's Crypto News Podcast. I'm joined by my co-host, and together we're going to dive into the biggest market-moving stories of the day.
That's right. We've got a lot to cover today, from the Federal Reserve's latest stance on crypto to warnings from a major industry player about the need for clearer regulations in the U.S.
Let's start with the Fed. Yesterday, Chairman Jerome Powell made some interesting comments during a press conference. He essentially gave the green light for U.S. banks to start servicing crypto customers.
That's right. Powell said that the Fed is not against innovation and that banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. This is a big deal because it could potentially put an end to the practice of debanking, where banks shut down accounts belonging to crypto companies or individuals.
Exactly. And this isn't just about allowing existing banks to offer crypto services. It's also about creating a level playing field for new entrants to the market. Powell's comments suggest that the Fed is open to innovation and willing to let banks experiment with new products and services.
Of course, this is all about managing risk. The Fed wants to make sure that banks understand the risks associated with crypto and are able to mitigate them. But overall, this is a very positive development for the industry.
Now let's switch gears and talk about regulation. Robinhood CEO Vlad Tenev wrote an op-ed in the Washington Post yesterday warning that the lack of clear regulations in the U.S. is stifling efforts to tokenize securities.
That's right. Tenev argues that tokenization could unlock private market investments that are currently only available to the wealthy. But without clear rules from regulators, the U.S. risks falling behind other capital markets.
This is a theme we've seen before. The lack of clear regulations in the U.S. is causing uncertainty and driving innovation overseas. It's not just Tenev who's sounding the alarm. BlackRock CEO Larry Fink has also called for clearer regulations on tokenized securities.
And it's not just about the U.S. This is a global issue. As other countries develop their own regulatory frameworks, the U.S. risks being left behind. It's going to be interesting to see how regulators respond to these calls for action.
Absolutely. We'll be keeping a close eye on this story and bringing you updates as more information becomes available. In the meantime, it's clear that the need for clear regulations is becoming an increasingly pressing issue for the industry.
And that's not all. We've got a lot more to cover today, from market analysis to interviews with industry experts. Stay tuned for more on the world of crypto.
Building on what we discussed earlier about regulatory clarity in the crypto space, it seems like we're finally seeing some progress. A recent court ruling deemed the SEC's refusal to issue a crypto rule as unlawful, which could pave the way for a more balanced approach to regulation.
That's right. And with the new administration comes new appointments at the SEC and CFTC, which could lead to more crypto-friendly policies. In fact, the new acting CFTC chair, Caroline Pham, has proposed an innovative approach to regulation through the use of regulatory sandboxes.
Sandboxes are an interesting concept. They essentially allow companies to test new products and services in a controlled environment without fear of regulatory reprisal. This could foster innovation and clarify regulations while still maintaining accountability in the industry.
Exactly, and it's a much-needed approach. Regulation by enforcement has been the norm for far too long, and it's stifled innovation in the space. By providing a safe haven for companies to experiment and test new ideas, we could see a surge in creativity and growth.
Speaking of growth, the Fed's latest decision to hold rates steady has had an interesting impact on the market. Bitcoin initially fell on the news due to the hawkish language in the policy statement, but later recovered as Fed Chair Jerome Powell gave his post-meeting remarks.
Yes, the Fed's decision was largely in line with market expectations, but the accompanying statement did raise some eyebrows. The central bank noted that inflation remains somewhat elevated, which could be a concern for investors.
However, it's worth noting that the Fed's decision to hold rates steady is a positive sign for the economy. It suggests that the central bank is confident in the current state of affairs and is willing to take a wait-and-see approach.
And that's reflected in the market's reaction. Despite the initial dip, Bitcoin and other cryptocurrencies have largely recovered and are even showing signs of growth. It's a testament to the resilience of the market and the growing confidence in the crypto space.
As we move forward, it will be interesting to see how the regulatory landscape evolves. With the new administration and the proposed use of regulatory sandboxes, we could be on the cusp of a new era of innovation and growth in the crypto industry.
Absolutely, and we'll be keeping a close eye on developments as they unfold. The intersection of regulation and innovation is a delicate balance, but with the right approach, we could see the crypto space thrive in ways we never thought possible.
We were just discussing the increased institutional interest in crypto, and now we have a fascinating story about Canary Capital's ETF plans.
That's right, and what's interesting here is that Canary Capital never actually planned to launch ETFs in the first place.
According to their founder and CEO, Steve McClurg, it was a bet on Donald Trump winning the presidency that led them to file applications for 4 crypto ETFs.
And it gets even more intriguing. McClurg told CoinDesk that this decision was made after an assassination attempt on Trump during his presidential campaign.
It's astonishing to think that a chance event like that could shape the direction of an entire company.
And now Canary Capital is moving full steam ahead with their ETF plans, despite never initially intending to do so.
It's a great example of how adaptable companies need to be in the crypto space, where unexpected events can have a significant impact on the market.
Speaking of market impact, let's take a look at the current state of coin prices.
Bitcoin is stable above $100,000, which is a positive sign, especially with the Federal Open Market Committee, FOMC, meeting today.
And while Bitcoin is holding steady, some of the meme coins and AI coins are taking a hit, with significant losses over the past 24 hours.
We're seeing a lot of volatility in the market right now, with some coins experiencing double-digit losses.
On the other hand, some coins like Dogecoin and Tron are seeing modest gains.
It's essential for investors to stay vigilant and adapt to these market fluctuations, especially with the FOMC meeting potentially impacting the market.
And with the Fed's decision on interest rates looming, we can expect even more market movement in the coming hours.
We'll be keeping a close eye on the situation and providing updates as more information becomes available.
In the meantime, it's crucial for investors to stay informed and make educated decisions based on their own risk tolerance and market analysis.
We'll continue to bring you the latest news and analysis, so stay tuned for more updates.
So let's continue on the theme of Bitcoin and the mining space, where we saw some significant developments yesterday with Marathon Digital's production numbers. Building on what we discussed about the challenges Bitcoin miners face, it seems like some of the bigger players are getting more attention from investors.
That's right. We just got word that another activist investor, D.E. Shaw, has taken a stake in Bitcoin miner Riot Platforms. This comes after Starboard, another activist investor, took a stake in the company late last year. It seems like these investors are looking to shake things up at Riot.
Yeah, it's interesting to see what their strategy will be. Starboard was reportedly pushing Riot to explore AI and high-performance computing, which could be a way for the company to diversify its revenue streams. But with D.E. Shaw now involved, it's unclear what their priorities will be.
Absolutely. And it's worth noting that this kind of activist investor involvement can sometimes lead to significant changes at a company. We'll definitely be keeping an eye on this story to see how it plays out.
Speaking of significant changes, let's talk about Tesla's latest move. The company just reported a $600 million gain on its Bitcoin holdings in the fourth quarter, thanks to a new accounting rule that allows companies to value digital assets at market prices each quarter.
That's right. And it's interesting to see how this new accounting rule is going to impact companies that hold Bitcoin on their balance sheets. In Tesla's case, their Bitcoin holdings are estimated to be worth around $1.190 billion based on current market prices.
Yeah, that's a significant chunk of change. And it's worth noting that Tesla didn't disclose its Bitcoin holdings in its Q4 earnings report, but Arkham Intelligence data puts the number at 11509 BTC. It'll be interesting to see how this new accounting rule affects other companies that hold Bitcoin.
Absolutely. And it's also worth noting that this gain is a nice boost for Tesla's bottom line, but it's also a reminder of the volatility of the crypto market and how companies that hold Bitcoin can be impacted by price fluctuations.
That's right. And it's a theme we've been discussing a lot on this show, the growing intersection of traditional finance and the crypto space. As more companies get involved in crypto, we're going to see more and more of these kinds of stories.
Definitely, and we'll be here to cover it all, so stay tuned.
We've had quite a day in the world of crypto, haven't we? The SEC acknowledging Canary Capital's Litecoin ETF proposal and the drama surrounding DeepSeek's alleged data misuse. Let's unpack it all.
Yeah, and it's interesting to see how these two stories intersect with themes we've discussed earlier this week. The Litecoin ETF proposal, for instance, marks a significant milestone in the quest for altcoin ETFs in the US.
Exactly, as Bloomberg's Eric Balchunas pointed out, this is the first altcoin ETF filing to get acknowledged, and with the SEC opening the comment period, we're one step closer to seeing a US-listed Litecoin ETF become a reality.
That's right. And it's worth noting that Litecoin is often referred to as the silver to Bitcoin's gold. This could have implications for the broader crypto market, particularly if we see a surge in interest for altcoin ETFs.
Now, switching gears to the DeepSeek controversy, it's ironic to see OpenAI of all companies crying foul over data misuse. I mean, haven't they been accused of similar practices in the past?
The tables have turned, haven't they? Bill Ackman's tweet about DeepSeek's alleged hedge fund affiliate making a fortune off short-dated puts on Nvidia and power companies raises some serious questions about data ethics and accountability.
And it's not just OpenAI that's unhappy. Washington and Italy have also joined the chorus of criticism. This could have far-reaching implications for AI companies and their data practices.
That's right. It's a timely reminder that the crypto and AI spaces are still largely unregulated, and we need to have these conversations about data ethics and accountability.
So, what are our key takeaways from today's stories? Firstly, the Litecoin ETF proposal is a significant development for altcoin enthusiasts. And secondly, the DeepSeek controversy highlights the need for greater transparency and accountability in the AI and crypto spaces.
And looking ahead to the market outlook, we can expect some volatility in the coming days as investors react to these developments. However, the long-term implications are what we should be keeping an eye on.
That's all for today's show. Thanks for tuning in, and we'll catch you all tomorrow.
And don't forget to follow us on social media for the latest updates and analysis. Until next time, stay crypto savvy.